Hello viewers, welcome to another exciting section of the Forex Traders Hangout with Rev Global Forex Institute. My name is Mary Elang and I'll be your host for today. Joining me today, I have two analysts, Isaac Oyelakin. Thank you for joining me, sir.
Thank you for having me, Mary.
The next person with me here is Thomas Umwaka, the fundamental analyst. Thank you for joining me, Thomas.
Thank you, Mary.
You're welcome. And today we'll be discussing a very important topic which almost every trader has experienced. And the topic is demo trading versus live trading. Why do traders behave differently? There's some situation that you see traders behave very well. They can build account from $10,000 to $10,000, but getting to the live market, the same strategy, the same analysis, the same chart, but what makes them not do well in the live trading section? And that is why we're here today to put you through what happened differently on live trading versus demo trading. And my question goes to you, Mr. Isaac. As a technical analyst, why does traders behave differently when they are trading in demo section and they move over to the live trading?
Okay, thank you, Mary. My response to that is the issue is not the demo account, neither the live account.
Okay.
The issues here are the trader or the trader, let me put it that way. From experience, there is no difference between demo account and live account.
Okay.
The only difference is just the emotion. If you're looking for excuse for the difference,
Okay.
it's the emotions attached to the live account. You will agree with me that when you don't have anything to lose, you are relaxed. And you'll be able to do well in Forex trading if you approach your trading, deploying your strategy from the relaxed mind. So the difference, the reason why people will do well in demo, but by the time they move to live trading, they start doing bouncing castle.
The truth. But why is it, does it mean that if they moved over to the live account, they become impatient or what?
Yes, exactly. Like I was saying, because of the emotions attached to their money. You know, demo account is a paper money. You have nothing to lose. So
Okay.
your emotions are balanced to allow the market to play out. So by the time you fund your real account and you open a position, the first thing you see is negative because of the spread charged
Okay.
by the broker. Then from there, if your analysis is right, you see market moving in your direction. So now, if your analysis, even your analysis might be right, but market will just move in a particular direction before coming to fulfill your analysis. So if you have not developed the capacity of, psychological capacity to manage the trade, to know that, for my open position to materialize, I need to be patient. I need to be disciplined. I needed to follow the procedure to allow the market to play out. So before you know it, you start altering the process. Altering the process is what is bridging the gap between the demo account and the live account. There is this say that until you treat your live account like your demo account, you won't do well. Can I repeat that?
Until you trade your live
trade your live
accounts
like demo account, What that simply implies that be emotionally balanced. Don't be attached to your traits. Once you trusted your strategy, excuse me, allow it to play out. Allow it to play out. So once you do a complete setup, which are entry, stop
Yes.
loss, and the TP, allow the market to do its things to play out. That's what happened in the demo. Once you place it, you allow it to play out. But for some of us in real accounts,
Yes.
once you see negative or market moving, not moving in your direction, emotion setting.
That is because it's real money. Maybe, for instance, somebody, maybe they borrowed money from a friend, a neighbor, and say, "Oh, let me fund my account and make sharp, sharp money." Before you know it, I think that is why the emotion comes in,
And
because they will
that's
not
the
want to lose.
problem.
When it comes to the demo account, they believe that it's free money. I have nothing to lose about.
Yes. So it's not right for you to borrow funds to trade. There's
Okay.
also this say that, oh, and don't trade with any money you cannot allow to lose. Does that mean that you're going to lose the money? No. But what that means is that, okay, it helps you to be psychologically
Balance.
prepared and
Okay.
emotionally balanced.
Oh, oh,
So
oh.
that's what it means. So the issue here is not the either demo or live account, it's the trader. So until you are fully prepared for the journey to trade live account as if you are trading
The demo
demo
account.
account, you won't go far.
Interesting. Thank you very much. And Thomas, over to you. In your experience, what is the biggest psychological mistake that traders make when trading live accounts?
Okay. Biggest psychological mistake. That's the
Yes.
question. Um, there are several mistakes, right, that traders make. Let us enumerate them in the order of, do I say, effect on the fund itself. Number one, if you disregard the use of stops when you are trading, if your risk management is poor, these are lethal problems that traders make when they are trading real money. You do not pay attention to your position sizing, right?
Mm.
Your money management is poor. Money management
So,
skills.
so
These
what?
are very dangerous mistakes.
Okay, so what if they are using the same lot size? Maybe let's say, for instance, you were trading with $100 account on your demo account. Then your live account is $100. You're using the same lot size. This everything is the same. But you see that that person is not doing well. He's not doing well on the live trading.
Okay, yeah, that still boils down to um, the mindset, our psyche. Our plays out when we are dealing with real life situations.
So how can they balance it?
Okay, let's first of all establish the truth that there is difference between what is real and what is not real, right? Let's
Okay.
establish that fact. Okay, when we do that, then we start looking at moving towards the center. Moving towards the center brings about the balancing now, right?
Yes.
So that when we are handling real money, we then know, okay, this is what I should do, this is what I should not do. Number one, you need to practice well. Practice well, good, before you step in real. What I mean by practice well is somebody might ask how long should practice well last. That depends on the individual, and that depends also on your, your learning ability, your learning capacity. There are persons who can learn how to drive just within a week, they can hit the road. And some other person might not have the mind until even after 1 year, they are still learning how to drive. These are different persons with different scenarios. Same car, right?
Yes.
And same road, but different, scenario playing out because of the individuals. That is also what plays out with trading forex. So you have a situation where the individual is so much sad. It happens to, can I say, virtually everybody. Good. Your mindset when it's real money and when it's not real money are two different things. We are striving to, like you say, to equilibrate it, bring it to, a balance.
Yes.
Good. So first, we learn to practice well.
Okay.
Two, understand why practicing. Understand that, like Mr. Isaac said a few minutes ago, the reality about live account and demo account is the same system. The same system. Good. So understand that what happens in real life and what happens in live accounts is the same. Now, the only difference maker is you, the trader. Because a market that is meant to buy with demo account,
Yes.
that same market is also meant to be bought with real money. So why is it that you are patient to wait for the buy to move in demo,
Yes.
but you are impatient
Patient.
to wait with real life? Sorry, with the real account. So these are issues we need to, balance out. So let's understand that the problem actually is not the market. Let's put it that way. Let's really understand. The problem is not the market. The problem is you as a person. Why? Because your emotion to real money is quite different from what is playing out with, demo accounts.
Oh wow.
All right.
I also last week a friend of mine reached out to me. He's a trader, like a new and upcoming beginner
okay.
trader. Yes, that's the right word to use. So he was doing well on his Zemo account. He now said, "Okay, let me fund my account." He funded his account with $200. He made over $6,000.
Wow.
And in the space of 3 days, he makes $6,000 and he blew the account. So he reached out to me. I was like, "What did you do differently?" Like, I don't know if you can relate what the person did differently. Maybe he did not set his, and there was no proper risk management or what. What happened?
Okay, the $200, was it real money?
Real money.
Okay, now this is what happened. This is what happened. Now, I really want us to, solve a problem here.
Okay.
With what is happening when people start with demo accounts. First of all, let's understand that this issue we're discussing, there are two schools of thoughts, all right, concerning whether traders should even go into demo trading
Yes.
or not. There is a school of thought that demo trading, disregard it, go into real life trading. Do you understand?
Yes.
There is a school of thought like that. Then over time, we find we're struggling to balance ourselves. Which one should we take? Which one is more ideal? All right. That is why you could be discussing with someone and he tells you, no, I don't want demo. As I learned, I will start with real money, and then I'll start with, a very low account size and position sizing.
Okay.
And I start trading. The reason is this. Let me just say something with regard to your friend. He was used to rob sharp practices with trading demo. What do I mean? A lot of people, when they are trading demo, they have the feeling that this is not real money. They have the feeling that this is not real money. They experiment an account of $1,000. They will look at the market, okay, let me try 2 standard lot or 5 standard lot. And once it plays out, they're like, wow, oh, they are happy. Now let's learn something. The subconscious mind does not understand whether you were trading demo or you were trading live account. It believes that what you are doing is the same. It cuts across, all spectrum and all horizon. Now, what happens then when you are faced with real money? Remember, using 2 standard lots for an account of $1,000
Yes.
is against our principle. It's against what the money management rule that we teach people, right?
Yes.
Now, you are faced with real money. The subconscious mind takes it that the experiment you did while you were doing demo account, play it out again. And so the person looks at $200. First, let me try 0.5. That is risky. That is risky. Now, it happens that it plays out and the person gets $50. It's like, wow, from 200 to 250 in a space of maybe 1 hour. 1 hour, right?
Yes.
Good. Then the first open trade works. He decides to increase it to 0.5, from 0.5 to even 1 standard lot. An account of $250. And maybe it's Christmas Day, or as we will say, or it's a works comes down day, it goes in his or her favor again. Now, the account of $250 now grows to like $500 with just 1 standard lot, because just a little movement of the
All right,
market, of the
thank
price
you very
to
much.
get it. So
Thank
at the end of the day, you find out that what plays out in demo is actually replaying with real account by gambling the market.
Thank you very much. And thank you.
You're welcome.
And Isaac, let's wrap up now.
Okay.
So, what advice could you give to a trader who struggle with fear during a market volatility?
Okay. How to handle fear during the market volatility.
Yes.
So, as a trader, you really need to understand your capacity per time. I mean, your level of understanding of market at the time. So, if you do not have capacity to endure volatility, stay off when there will be market news. That's just the only way, because volatility is good, but it's too edged sword. It can make you and at the same time mar you. So the most important thing to get rid, why will you be doing something from fear? Is because you are not sure of what is going to happen. Then if you are not sure and you still enter into it, it means you are gambling. If you are not sure, stay off until the dust settles. Then you can now move on. Then please, before we round up, I'm really interested in your friend story.
Okay.
To add up to what Mr. Thomas said, I think, well, I don't know if he told you or she told you how long does it take to raise account of 200 to 6,000
It's a 3 days.
within 3 days.
Yes.
That is not trading. That's pure
Gambling.
And the book of life said, if the foundation is faulty, what will the righteous do? Your friend is not a trader, he's a gambler. It's so funny the way people see Forex. People thought that maybe Forex is a money doubling market or getting rich quick. It doesn't work that way. The same process that I used to raise 200 to 6,000 is the same process that you will blow 6,000 to 200, because it shows that there is a lot of, I mean, things are not right, imbalances.
Yes.
The process is not right. The process is not right.
So now, what is the important mindset that a trader should develop to succeed in live accounts?
Okay, get trained. Get trained. The truth is that life learning precedes earning. So after going through maybe training,
Yes.
the next thing will now be to implement, to put what you have learned into practice. Then trade as if you are running a business. Don't do what is called flipping accounts. Like that's the case of your friend now. There is what is
Yes.
called
Flipping
flipping of
accounts.
account. But the truth is that forex trading is about analyzing the economy and make use of the information deduct from such analysis to make informed decisions. The entire economy of a nation celebrates 9%, 12% in a year.
Okay.
So why will you as a trader will now be boasting that you flip your account? It means you are not trading. What you are doing is that you are trading forex but with gambling approach. So the best thing if your bank in Nigeria will not give you more than maybe 14% on your fixed deposit in a year, or 21, maximum of 21% in a year, and you believe that okay, you want to trade and double your account or turn $200 to maybe 10,000 in a year. It's not possible. You can achieve it but at the same time, the same process you use to achieve it is the same process that you lose the fund. So get trained, practice what you've learned, become the person that can earn from the market. It means that work on your psyche, understand how forex works. That is a business. Trading is a business of buying and selling of currencies, global currencies. So it's not a double, I mean, money dumpling system.
Oh. Thank you very much. Thank you, viewers, for joining us. I hope you enjoyed this section. We'll be moving over to market analysis after a short break. Thank you.
I am Thomas Omoaka. I will be taking you through the market analysis very, very shortly. Please come up with me. The asset we'll be looking at is gold, and it's denoted with these letters XAU USD, the wonderful yellow metal XAU USD. Let's go to the chart. All right. With me here is gold. First of all, let us establish one fundamental truth about gold. Right now, gold has been selling. In fact, the beginning of this month, that is the month of March, has been in favor of gold sellers. Those shorting gold have really been coasting home with smiles. And God forbid that since the beginning of this month, you'll be buying gold. Wow, it will be very, very dirty for you. Okay, now let's go to the chart properly. We first of all look at the monthly time frame. Okay, we look at the monthly time frame, we decide that gold is selling, has been selling massively. I don't want us to bore us with the history of the bullish move upwards when gold hits the 4,000, 5,000 psychological level, price level, and moved from there to even 5,400 up onto 5,000, 5,500. 5,500. From there, it started dropping. Now, what do we learn from all this? Why has gold been selling massively this month? Is one question we need to ask ourselves. The answer is not far-fetched. What is happening globally right now is affecting the move of gold, right? Now, gold prices, you remember, gold is priced in dollar, right? Same way oil is priced in dollar. We are aware of what is happening in the Middle East right now, Iran. When US, Israel, and Iran problem came on board, it's the demand for gold drops. Why? There has been a sharp demand for the price of the dollar. Now, oil prices are high at this moment, and that has increased the demand for the dollar. Remember that the dollar, oil too, is priced in dollar. If you know what they call petrodollar, right? In the international market, oil is priced in dollar. Now, when the price of oil is risen, the demand for dollar will be risen. That will strengthen the dollar, right? Now, remember, we have XAU USD as the gold denotation. What that automatically means is that the demand for dollar vis-a-vis the demand for gold is higher, relatively very high. Now, investors are looking at where they will have what we call interest yield. All right, when they put their money in safe haven assets, where would they get more yield? Where would they get more interest? If you consider gold and the USD, there is more interest yield in USD than in gold. So, the price of US dollar, the US dollar has become stronger, all right, relative to gold, because oil price is moving very high, higher and higher every day. Now, that establishes the fundamental reason why we have XAU USD selling aggressively. Now, when you check our chart last week, for the past 4 weeks now, almost a month, for the past 1, 2, 3, 4 days now, the entire last week has been massive selling for gold. But will this selling continue till eternity? No. You know what happens with Forex? The market moves in waves, right? You have a situation where market will sell to an extent, it pulls back, it tests some, levels, psychological levels, key levels, it pulls back, and then it continues. So we have higher high, higher low, higher high, higher low, or lower low, lower high, lower low, lower high, as the case may be. That is how we have them movement in the market. Now, basically, what do we do with gold price currently? Somebody is asking. Basically, it determines what kind of trader you are. Now, when we look at the overall trade, of gold, we find that gold is still bullish. Regardless, gold is still bullish. right? Now, for the past 1 month or thereabout, there has been signs of reversal. That reversal, we don't know whether it's temporary reversal or a complete change of trend. We don't know whether it's a temporary reversal or complete change of trade. However, as intraday traders, as swing traders, we need to look at what to do, where we position ourselves, to do justice to the market. Now, technically speaking, let's come to the chart. Gold is, look at daily, first of all, look at the daily chart. There you see gold has taken off moving averages. Yeah, it has taken off moving averages 21, 50, and is on daily is on 200. It has just kissed the 200 period moving average. That point, that level, is a very strong level for reversal. Yeah, it's a very strong level. When we take our fib from this point, we find that it's almost completing 100% retracement. So it's taking off. Now, when we look at our weekly chart, we find that gold has taken off the 21 moving average and is hitting the 200 moving average. Now, something happens. Anytime you find that the moving averages, each of those different moving averages collide with the time frame. Now, on weekly, the market has hit the 50 moving average, and on daily it has kissed the 200 moving average. So we're expecting a temporal movement of price or bounce in pricings. And then when you look at your monthly time frame, of course it has not got into 21, but where it is right now is at a very strategic level. So for intraday traders, we're expecting a buy. For intraday traders, we're expecting a buy right now for gold. When you look at the lower time frame, like 1 hour time frame, check your RSI. They are all extremely oversold. 1 hour, 30 minutes, 4 hours, they're extremely oversold. So price is expected to bounce back at some point. Look at also the 1 hour time frame. We see a bullish hammer created here, a bullish hammer. All right, very strong hammer. You can see it. Let me zoom it out so that you see it very well. This is a hammer. Good. What does it indicate? That the price could move up, temporarily to where? Temporarily to where? To maybe hit back this level, this point, or even possibly up to this level. Okay, up to 4835 or 4554. Okay, so we are having a price action indication that price will go up a moment. But don't forget, we say the overall trend for gold is sell right now. Good, is sell. When you check your 1 hour, your 4 hours, your daily, gold is selling. But on weekly, monthly, it is a bullish trade. So we are taking advantage of the intraday, setups right now, especially today. You can buy gold today and watch out what happens tomorrow, because gold is at critical level. The 200 EMA on daily, gold respects it very well. You can backtest in history. Once it kissed that level, it bounces off from there. Once it kissed that level, it bounces off. So we're expecting a bouncing from here up or to either here, or move a bit higher to here, before we expect market to continue, selling. All right, let's watch out how it plays out. Don't forget, today is just Monday, and you see what the weekly candle has played out already. So there will be a pullback, from here before a further movement downward, if the situation going on in the Middle East persists. So we expect gold to keep selling. If oil price continue rising, we expect gold price to keep selling right now. But once we hear stability, peace coming up in the Middle East, pack your load and get out of selling gold. Thank you, viewers.
Thank you for watching. I hope you enjoyed our analysis section. And if this program has been helpful to you, please do well to subscribe to our channel, like, and also you can share. Remember, the difference between live trading and demo trading is not because the market changed, but it requires the traders' psychology, their discipline, and their emotional control. Thank you for joining me, Thomas. Thank you for joining me, Isaac.
Thank you, Mary.
Once again, I remain Mary Elang, your host and your moderator. See you guys next week.
Melembe, Melembe. What does that mean? Calm down. Take it easy. Melembe, Melembe.